Hey, good morning, everyone. This is Julie at J Auto Trading Strategies. It is Saturday, July 23rd, 2016, and I want to go over the customized UniRenko bars that I use to trade and why I love them so much, and show you a few tricks on how to use these bars. The first thing you can do is you can create bar size to match your volatility. So normally I like to trade a 30 tick range in crude. I find that to be a manageable higher time frame range for me to be able to find a market that is trending directionally during that 30 tick range. Once it starts trending, I can kick it down to my lower time frame chart and get in the trades in that period. If the volatility breaks a body close above that level and then continues the trend, I know that I've got to increase or decrease my bar size. In this instance, the body did not close above it, not a full body close, so this trend stayed intact. If you want, you can increase the bar size to make sure that everything gets inside the trend or the volatility level. So you can kick it up 5 ticks. I'd like to keep within 5 tick increments in crude because the crude is a 1 tick market. So 10 ticks, 100 ticks, stuff like that. So as you see that I kicked it up a level and I stayed in my trend, and here it was a same thing on the 35 tick where we just got a few ticks above it, but otherwise we stayed within the trend. But 35 ticks is a little bit too much for my budget. So let me put this back on a 30 tick, which fits very well within my budget for trading. That's a $300 reversal if I'm unfortunate enough to enter down here and get reversed. It's just about $300 that I'll have for my risk to get out of a trade. But the theory is that once you get the volatility level, that's like being in the lava flow. That's the direction you want to trade, and you only want to trade short. So these are your trades, okay? And I've got this set up on my template for you. So once you get these short entries, you can simply trade this with a 350 tick. And it's 30 tick range, a $300 risk. What I wanted to point out is once you get into a trade, it might come back against you, like right here. Instead of worrying about that retracement on the smaller time frame, when you get a retracement, this is the time to enter the trade as a trend continuation. So when you get some heat coming back against you, if it doesn't violate, do you see how I get the body doji close here and the body doji close here? I just put a chop box around that and realize that anything in that range is going to be choppy. Once it breaks below that range, that's my trend continuation. So if we're below that and come back in the box, don't be afraid of that necessarily. Just realize if it closes above that, then definitely the trend is over and the price has changed on you and you're in a very unstable market. Get out of that trade. But this is where you can add on to your position and either get back in if you had exited once price crossed above that level, if you want to get out and not, sit through a $200 move or something. But you can get back in here or add on. That's a very good location to double up your position or triple up, because you get the maximum reward by entering. Look at that, $1,830 on one contract. So that's how you want to use these magic custom UniRenko bars and these magical doji bodies, to know where your risk is, and also to know where to look forward to these retracements, jumping in when you can as close to that level as possible for a very, very minimal risk and maximum reward trade. Do you see here how it did not get a body close above that? So this trend is still intact, and you can get back in here when you get your signal. If you like I am, I trade on the smaller time frame, and I can come back in here and same concept. I use a half of that position size. So there's 30 ticks here. I've got a 15 tick bar size here, which is a very good bar size. A lot of traders trade a 15 tick crude risk. And here's your entries. And again, anytime that you're within your volatility level, just stay with the trade. When you're already in the trade, when it's already turned on the higher time frame, don't be shorting these until it actually turns in a body close. So we're staying out of tops and bottoms. We want that body close because we have the momentum on our side then. That's when we want to enter the trade. Okay, so we're trend traders, not top and bottom traders. And my direction guide strategy shows you when to double up on those positions, because if you're trading below the previous close, that you'll start getting the top band printing. And that's also with the regular trading hour session, below the previous close and below the current open. When you start getting past the prior day high low, and then when you get past the previous sessions high low, do you see how this was just sending you down, 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 down? And you can keep hitting it, hitting it, hitting it, hitting it, hitting it until you get that doji close. But you could make a ton of money in here. This is where you want to be trading. Absolutely, on your lower time frame chart, nailing these and getting in, putting your 2, 3, 4, 5 contracts in, getting your $500,000 shots, get out, and then wait for a retracement, and then get back in and get another one. As long as you're still printing these flat tops in a downtrend or flat bottoms in an uptrend. When you get sideways price action, you stay out of the market. Don't trade this. There's no edge. There's no edge at all. You might have gotten in here on this close above the volatility level to get some of this, which is fine. But, and there was, you can do a lot with that range. So you have to think about trading as ranges that you can get. But the key to successful trading is waiting for a trend continuation on a volatility level. So I'm always mindful of where I am. If it starts getting wicky, I just get out. I want to see I want to see my opportunities in a lava flow. I like, I like the path of least resistance. And once it starts printing in that path, just stay with it until you start getting the bumpy bottoms. And this could be, one of the bottoms in crude. I mean, we're way back down here to 43.75. So there's going to be buyers coming into this market. Trust me. I would not be surprised to see a body close above my lower volatility level and start pushing back up next week. I'm not calling a top or bottom in the market at all. I'm just saying I trade my path of least resistance when I get them set up. And I know how to enter back in the position for that lowest risk possible and when to time those using my doji bodies and my chop boxes. And I sit there and draw these on all of my charts and stay with that trend. You see how it did not violate it, it stayed in it until you get a breakout change in direction, and that will signal you. I mean, I would be out here. I would not take it all the way back up, but you'll start getting used to drawing your chop boxes. And see, once this violates that box, we're in a trend change. So I will be looking long in crude on Monday and flip it over. And here's what longs look like, and just go in that direction. It's long or short. We can trade it both ways. You just have to know what you're looking for and how to get in when those opportunities present themselves. So pick up a template, come to my website, www.jautotradingstrategies.com. You can look at the screenshots, flip over to here, open one up, and you can just flip through them. I've got about 180 screenshots in here of my templates. And you can come over to the purchase page, and that'll tell you a little bit more about my indicators, templates available, and services, including a training room that you can join for $50 a week if you'd like to kick the tires on one of my strategies. Thank you very much. I'll have a great weekend, and also be aware of the risk disclosure and hypothetical performance disclaimer on the website, as futures trading does contain substantial risk and you can lose everything out of your account and more. So please sim trade my strategy or anyone's strategy before trading it live in your account. Thank you so much. Have a good weekend.